Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Gargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first take a look at the currency market. The rupee has slipped to a fresh record low, breaching key psychological levels and sparking concerns in the currency market. Now, with global risk-off sentiment rising and speculative pressure building, all eyes are now on the RBI's next move. For what triggered this sharp slide and what could stabilize the rupee, let's go across to Vishwanath Nair.
All right, so why did the rupee actually see this massive crash on Friday? Essentially, there are a few reasons why this played out. The first of which is, of course, the way that the international markets have performed. You're seeing a general risk-off sentiment, specifically after the events in Japan, where interest rates have started to go up, and because of which the bond yields started going up, and the carry trade proposition that was quite prevalent as far as investors in Japan are concerned, the reason for that started going down. So money started being pulled out of a lot of economies. So that is probably the first reason why the rupee reacted this way. The second one is, of course, the Reserve Bank of India. You know, over the last few trading sessions, you're seeing that the rupee was being defended at 88.80, 89 being that very important psychological barrier for traders out there. So the minute the RBI let it loose and rupee started weakening past 89 a little bit, you saw that there was a lot of selling in the market, after which you were seeing rupee weaken past 89.60. Another important reason why this happened is also the way speculative trading has been happening in the currency market at this stage. There's a lot of speculative pressure. That's what traders seem to be suggesting against the rupee. While the trade numbers were not that great, the balance of payment numbers were not that great, but this was also being prompted by the wide sort of increase in the gold prices. So accounting for all that, India otherwise is in a relatively safe macroeconomic position. However, the rupee continues to weaken. Now, what will actually change the situation? Firstly, the RBI's intervention. What traders believe is that around 89.50, the RBI is going to come in and start defending the rupee and ensure that it remains above that 89.50 mark. The second thing is a strong trade deal with the US. If a trade deal is announced soon, then that might actually turn the tide for the rupee.
Thanks for that, Vishy. We also have Puneet on how the markets reacted to the rupee fall and what sectors and companies stand to be benefit or stand to be hit. Over to you, Puneet.
Well, thank you for that. We definitely did see that impact in the last half an hour of trade yesterday, but there are two sectors we always keep focusing on in terms of any impact on the rupee depreciation, that is oil and gas and IT. But firstly, the rupee depreciation does make import costly, and that's very well known, as well as the cost of debt actually increases as well. So when you look at the other aspect, which is the key sectors, IT, upstream oil and gas, as well as the CGD companies, the city gas distributors, do have a material impact as well at this particular point of time. When you look at the IT sector, we do see a favorable impact coming in because of the rupee depreciation. Historically, rupees 1 to 3% depreciation versus the US dollar, euro, pound, as well as the GBP also does focus and give perspectives to the IT sector. A higher depreciation also usually leads to a higher margins for the IT players, and because of that, they can actually pass on some of this benefit to our clients for a more competitive environment for the IT companies. And companies which have a higher offshore employee mix generally get a higher benefit of the depreciation impact. When you look at some of the key companies, LTI, Mindtree, Wipro, Sagility, as well as something like a Coforge, do get a benefit of that because of higher exposure towards the US dollar as well as the euro and the pound in terms of their clients. Amongst others, we also see something like a Persistent Systems, Indegene, and Emphasis, which are a beneficiary because of the higher exposure to the US dollar revenue. The other key sector, that's the oil and gas, and there are multiple key aspects within this, and we'll continue to put focus on that. There's a mixed impact of rupee depreciation on the oil and gas sector as well as on the companies. While it is positive for the upstream companies who are into exploration, it is a negative for larger OMC companies, oil marketing companies, as well as city gas distributors. And you see a negative impact for OMCs because of margins that get impacted on the retail side. So that's largely on oil marketing companies. When you put focus on all of these three key segments, city gas distributors is the key one where they see the most impact of the rupee depreciation. Brokerages largely estimates that every 1 rupee change compared to the dollar impacts something like an IGL, Enterprise Gas EBITDA, by almost 4.9 to 5%, while for Mahanagar Gas Limited, that's roughly between 1.7 to 2%. Upstream companies are a direct beneficiary of the rupee depreciation. Selling is both essentially in the USD, so that does impact positively to their margins. Oil India, slightly more sensitive compared to ONGC. For Oil India, the EBITDA is roughly 1.4% for every 1 rupee change compared to the dollar, while for ONGC, that impact is 1.2%. We see other companies like Petronet, LNG, and Reliance also get some of the key benefits, but that's largely a lowdown with IT as well as oil and gas, the two sensitive sectors to rupee depreciation to the dollar.